Market Call Tonight is brought to you by Questrade, where you can trade stocks from 1 cent and buy ETFs for free.
Welcome back. Let's take a look at top picks right now, David. And the first one is BlackRock BLK.
So I really like equity markets and the bull market in the U.S. going forward. I also really like the secular trend in the growth of the use of ETFs. And of course, BlackRock is the undisputed leader. $4.7 trillion in assets, net inflows regularly. They've had about $100 billion in new assets come in the door over the last couple of months. Their margins are growing. And if you believe that markets can go higher, that's a growth in fees. If you believe they can grow new assets, that's a growth in fees. And if you believe that ETFs will take market share, that's a growth in fees. So this is a company that has a 2.5% dividend yield that will grow at 12 or 14% a year. And you get really exposure to the growth in markets. And I think that it's a very attractive proposition.
What's it like from a valuation perspective right now?
Look, it's not inexpensive, but it's 18 times earnings. You know, it's not expensive. I know that they are doing very well with what they call smart beta ETFs or actively managed ETFs, which are have a higher fee, and they're taking market share from everybody. So I think that this is a great way to invest in the growth of ETFs and acceptance of risk, which happens as you go through a bull market. People will take more risk. Okay,
let's take a look at the next topic. It's Honeywell.
So I mentioned that industrials really have come back very nicely, and Honeywell has been a great company. They've grown their dividend 12% a year over the last 8-9 years. They're growing their earnings at 12 or 13% going forward. They're in 3 major markets: smart automotive, smart home automation, and in monitoring systems in aircraft. So this is, if you believe that more electronic gear is going to go into cars and homes and aircraft, more electronics, Honeywell is the market share leader in all 3 of those. So it's good dividend growth. It pays a 2.1% dividend. They have been a very consistent grower, and it's a leader in the industrial space.
Okay, and the next one is FrancoNevada.
So I'm a big believer in picking your spots. And our breadth models took us out of golds in 2012 not to return until January of this year. And we started to see improvement in breadth. There were a few companies, there always are, that are able to grow as you go through a downturn. FrancoNevada grew their ounces that they get credit for by 15% this year in a very difficult year. They became the financer of last resort for gold companies that wanted to finance. They get a royalty on all of the gold their companies produce. And it's one of the best performing stocks in the group. It's performed better than 75% of stocks in Canada every year for the last 10 years.
That's incredible.
So it's been a very consistent performer in an industry that's very cyclical. Now, maybe a chicken way to own gold because they're just getting a royalty. They don't have any costs. But I like to own things that will do well in all types of environments.
What's the risk to it?
The risk is, well, of course, if the price of gold falls out of bed. And we believe that it looks like something relatively substantial is happening with gold and silver. Silver broke out technically today. Palladium broke out technically today. I'm not a gold bug. But I do believe in buying the best company in a group, good getting better, where you're not dependent on a better environment. And I think that for this one, they have a diversified portfolio of holdings. As long as gold holds up and there's an appetite, they should do well.
What about the risk, though? And I've interviewed the CEO, and we only have 30 seconds. But what if the environment does get so much better for gold companies, and therefore there's going to be less opportunities for FrancoNevada to buy those streaming resources?
They have to pick their spots. And fortunately, they've made some great deals during the downturn. So we'll see those play out over the next few years. And if they have to wait a couple of years to do more deals, then they can do that. They have plenty on their plate in the near term.
Okay. David, great to be with you. Thanks
for having me so much.
Thank you. And great to be with our viewers as well. As always, please do consult a qualified financial advisor before making any investment decisions. Thanks so much for joining us. And we hope to have you with us on BNN tomorrow.